In this video, I'm going to talk about how a company would determine its budgeted purchases for the period, the amount it would pay, and the timing of those payments, and then what it would owe at a point in time, accounts payable. So here we have Vicious Cycle. It's its first quarter of business, and it expects to sell 400 bicycles per month. It always wants to have 40 bicycles in inventory at all times. The bikes cost $30 a piece, and they expect to pay their bills, whereby they pay 20% in the month they buy the bikes, and the remaining 80% of their bills in the following month. So let's go through what occurs. In January, they're going to buy 440 bikes. The cost, the dollar amount for the purchases, is equal to $30 a piece times the number of bikes they're going to buy. So they're going to spend $13,200. Now, as far as the amount that they'll need to buy in February, they only need 400 bikes, because if you look at it, they buy 440 in January, they sell 400. That will mean that we'll start February with 40 bikes. That means we'll then have 440 once we purchase another 400. You sell 400 and you'll have another 40 at the end of February, and on and on. In other words, you only have to buy the desired beginning inventory once. You don't have to keep buying an additional 40 bikes. Otherwise, your inventory will grow by 40 each time. So again, the formula, and I'm going to just paste this down, which is basically taking your purchases times 30 bucks. You can see that up here. Now, how about the paying of this? Well, in January, what gets paid is 20% of what got purchased in January. So equals 0.2 times, and the rest gets paid in February, which is equal to the 80% times your dollar purchases in January. So by the end of February, we'll have paid off all of the purchases made in January. If we were doing a monthly budget, your cash paid for purchases would be $2,640, and your accounts payable at January 31 would be the $10,560, i.e. what you haven't yet paid for your purchases. All right, but we're going to do it quarterly here. So in February, it's the same formulas, if you will. 20% of the purchases get paid in the month of the purchase, and then the rest will get paid in March, and that's 0.8. And then again, if I could have you look, if I were to ask you what's your accounts payable at the end of February, your payable amount is what you haven't paid yet and will pay next month, which is your $9,600. So now let's go into the paying of March's, and then we can get the answer to this question here, or these items here. So in March, we're going to pay, again, 20% of the March purchases, and the rest in April. What is the calculated budget for purchases? Your purchases, I'll put it right here, is the sum of the 3 months. In other words, the purchases for the quarter. So that's your purchases for the quarter. So I'm going to bold that. That's your first answer for this particular problem. Oops, I didn't mean to do that. The amount of cash payments now for the quarter is going to be the sum of all that. So I'm going to put it right here. It equal to the sum of 13.2 that you pay by the end of the quarter. The purchases that you had from February is all paid for, and only 2,400 of the last month, March, has been paid for. So this is cash paid, or expected cash payments. I'll make those green because that's basically the cash flows piece. And then lastly is your what is owed, and that is this right here. So the 9,600 is your accounts payable, and that would be what you'd see on your pro forma balance sheet under liabilities, the amount that the company still owes at March 30th. So here are your answers for these three items.